Hey there, Jedi traders. David here of TradingFibs.com to bring you State of the Indices recap and outlook for October 16th, 2015. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes to support your knowledge in the market, see what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Let's go ahead and jump right into the major indices and adding to our lineup this week, the crude charts. So we'll go ahead and cover those as well. Let's jump right into the TF as market really took a change. Thinking right here, as you can see, we're going to see this on all of our four major charts today, but we can see here the market just leaving an intraday gap right there. 24-hour chart, no problem, but intraday wise, daily gaps will eventually get filled. So while it's nice to see the trend turn around here and the market rally, knowing that eventually, maybe not today, tomorrow, next week, in a month or a year, that gap will eventually get closed. So just something to know that when it comes to the indices, market closes its gaps. Market indice closes a gap. That means the higher we rally, the harder we fall eventually, or we grind down. Either way, market action will eventually come back down and fill it. So using the big picture here, as we do every day before the market opens, we take a look at, including the overnight action, where are we at. Big picture on a weekly on the TF Russell, we saw fib extension support here over the last couple of weeks. Fib monthly also finding that support down there. It was the key on the daily here, even though we continue to move back upside on the Fibonacci retracements here, drawn from the highest high to the lowest low. Finding that kind of support around 50% as we migrate a little bit higher here in the Russell. Still resistance here at the 50-period moving average, while on the 4-hour chart we see bouncing off this week as market action came down to the 140, found some support here and bounced right back upside above the 50-period moving average. Up here in the upper left-hand corner, we have the 100-tick range chart and including the 4-hour on a T3. So taking all the graphs together, we come up with a 50%, pretty much half and half. It's probably the lowest of the biases in all the markets, whether we're going bullish or bearish at this point. So usually I tend to say that if the market is in a bull run, I'm going to be looking pretty much at the left side of my screen here. These two charts here, 100-tick range chart, the 244-hour chart here with the T3 moving average crossovers, and the 240 minutes. So on the overall big picture, I give it a 50% to the bulls and to the bears. But what I typically will do is I will go then to the daily trading chart and look for where is the 5144, where is the 20-tick range chart, where is my 534 exponential moving average, which I'll show you here in a little bit, give an example on the NQ. And when you add up those trends, you'll get a higher percentage. So, you know, for today, when we look at the Russell, we see here on the Russell we had a 50 above 144, representing here by the 3 bars on our, including our 5-minute bars up on top for overall resistance and support. But we're looking at the two charts here, the middle chart and the lower charts, and we kind of green, green, green. And here on a 10-tick, we got a green. Our percentage will increase is towards whether we're in a bearish or bullish. So if you were to take all the green here, that would increase the odds to almost, you know, like a 75% bull run for the day. But for the long-term picture right here for the Russell, we're at a 50-50 on the recap for this week. As we head into next week, you know, if we get a change daily looking at the 100-tick and the 4-hour charts, and this starts to turn red again, then our bias will shift again back down to the bears, which is pretty much in line with the overall big picture. So as we run into the weekend, that's where we sit. Taking a long term at the YM, sitting at a red and a red. Overall, we could see resistance here at the 144. We found a push up this week, midweek, at the 50 period moving average. And again, the shorter term picture here, the YM on the 4-hour chart and the 100 tick range chart, both back up in the green after a bounce downside for the week. We can see price action here, pretty much two trends for the week. And then also that infamous daily gap that's open here as we pushed above 50 period moving average, and we run up for a fib extension here at negative 23.6 as market action continues to the upside. So a little bit better than the Russell here. We're giving this right now as we close out this Friday, October 16th. We give it a 62% shift to the bulls at this point. Again, in line with the daily picture as we just showed you on the Russell. You know, if you got 62% in the green here, and you go to your trading chart and you see you got a green on the 50 144 and you got green all up here in the middle rows, that would go ahead and increase your probability that the market would be moving towards that trend. All right, let's jump into the NQ. NQ, out of all the indices of the week, here we can see price action, you know, waffling a little bit, had a little uprise, downshift, and then boom, the last 2 days absolutely taking off with the rest of the market. 100 tick range chart in the green, 4-hour chart in the green here, found support at the 50 period moving average here midweek, and just broke above the daily 144. Still downside on a weekly and monthly, but again, we've pretty much have kept this fib retracement here on the line, but the truth is at this point we're just about to take this off because we have broken through and broken the trend, and really now what we have is we have movement to the upside, but we still have that gap down below. So I'm going to go ahead and give the NQ a 75% shift to the bulls right now, bull bias. And again, on a daily picture, when you put this all together, you're looking at the charts, you see green all up the board, and you say, wow, there's a great trend moving to the upside intraday because it's being supported by a 75% bullish bias. Not to say you can't take a setup in the short, but the higher probability perhaps run will be to the side where you have the greater bias. All right, let's wrap up a couple of other long-term charts here. Taking a look at the ES. ES here we see bias to the downside. Here we can see market action trying to break above the 144. Again, just like we just saw, bias, just finding support here at the 50 period moving average. So close to the NQ, 71% shift in bias to the bulls. As we can see, same picture, we've broken above the 61.8. We'll go ahead and throw a fib retracement and extension and see where is the highest probability number as we head into next week. So again, concern still over that open gap on all these major indices, 4 major indices, as we can see here sitting down here. We'll take a look at the market profile and volume profile and see where these levels are. Jumping into our edition this week, the crude charts, as we have numerous traders in our who follow us in our trading room. Here we have the crude also on our chart. So just last couple days trying to get a feel of where market action is. We can see the crude has turned to the upside on a monthly. We've just been ripping downside for 2015. Downside here, a slight shift in the green. So green half on this. So 1.5, 2.5 in the green at this point to 3. So about a 40% shift, almost as the TF, about a 50% shift. So 50-50 on the crude. We can go either way at this time. So line it up with the intraday. If all your bars are in the red, it just has much probability of running as it does to the downside. Wonderful day on the crude as it moved up today, keeping you in the trend as it works its way towards the naked VPOC, but never getting there. So incredible trend today, upside on the crude. All right, let's go ahead. So that's our big picture, guys. I think ranging from 50% up to 75%, nothing at 100% in trend right now. 50% can either be either way, and anything around 75% has a better odds of going in the direction of the trend. All right, let's jump into market profile. If we're talking about daily gaps and open points of control here, we could see price action here. Let's start with the TF here. We could see market action 1, 2, 3, 4, 5 represented by the week. Market action takes care of its open points of controls and daily gaps. Here we have sitting downside. You can see represented by the dashed lines. Really a lot of action at the tops today. Weekly opening price up here around 1162.3. We can see a couple daily gaps were closed out during the week, and price action closing out each daily gap. But we still sit with some major holes downside, 1128.5, 1122.10. That's right. Go back to that long-term chart. We're talking about these holes that are represented down here that we need to come and fill. So let's go back to the market profiles. We can see, again, price action 1, 2, 3, 4, 5 days. Closing out near the highs for the session, or actually midway around 1155.7 here. So who knows for next week? Again, remember the probability. We're 50-50. It can come back down, close out that gap down here 1128.5, which is very doable in a week, 1122.10, and then we can head it up. Numbers still down below 1113.5 with several open points of control. So that's where we sit on the Russell. Looking at the YM here, YM we have price action 1, 2, 3, 4, 5 days of price action. Weekly opening price around that 17,000 was just a magnet all week. Here we could see, that's right, shaded here, market action taking care of a business by closing out open points of control, and then each and every day daily gap. We finished at the high today, 17,117. But the YM still have some open business down below as low as 16,379. So again, the higher we rally, the more consideration of those open holes down below, that eventually the market will come and close those out. Let's jump into the NQ. Again here, 5 days of trading with a little bit sideways, and then boom, Thursday just rallied to the upside. Closed out today's gap 44.12 and finished at the highs 44.38.75. What a run on the NQ at the end. Incredible last minute trade. I'll show you that here in a little bit. We still have some open gaps down here, 43.62.50, and if we run it all the way down here, we got 39.97.50 on the NQ. Still a major move to the downside that is going to be a big drop if it eventually comes. Taking a look at the ES, did a fairly similar business price action, closing out points of control. We still have that Wednesday's open gap, 1984.25, with also 1943, 1874.75 down there, open gaps. But right now, hey, ES in a 71% biased to the bulls, and include the intraday setup, and you got yourself a hell of a run there. So ES continuing to rally up here. And finally, new to our setup, as we just mentioned, the crude, we've been seeing this downtrend consistently. Price action shifting up a little bit from the high of the week, from 50 bucks, now settling around 47.26. Closing out yesterday's gap, 46.86. Open points of control also being taken care of. Now, while market profile is a favorite of many, it is volume profile where I put a lot of my intraday focus, as I will show you here how that lines up with the trade. But here we see volume profile for the week. Excuse me. A little bit of a different picture when you come to the charts. As you can see, instead of time-wise, where did the trade sit? It was more of at what price did most of the trading take place. And again, on volume profile, we also take care of business, VPOCs, naked VPOCs, all up and down the row. We can go in either direction as the price action moves. Again, closing out here represented by the 70% range. And what a wonderful setup. Again, I'm going to show you here on the NQ in a little bit how you can use the volume profile to your advantage. So here we go. Looking at the TF, YM, similar picture, taking care of former VPOCs down below, but yet we still have, just like a daily gap, we have price action both above and below that needs to be closed out. Here we can see price action, very, very tight range today on Friday the 16th. Volume profile here on the NQ, again, 1, 2, 3, Monday, Tuesday, Wednesday, a little bit sideways and down. We came out Thursday punching upside, and Friday Again, leaving some major open gaps down below as price action still, we said we got some distance to go on the VPOCs, and we also have distance to go on the daily gap. So price action eventually will return. And so right here we closing out at the highs of the session outside the area of value. And then volume profile here on the ES, again taking care of open points of control and finishing upside at the highs 20, 26, 25. Again, there's a lot to understand when it comes to market profile. There's great writings out there. James Dalton, Stoudemire, if you guys want to get into market profile. But I keep it simple. I don't necessarily, I use my trend trade, but it really is, it's using the volume profile in addition to where is the market trending and how to use that on an intraday basis, which helps me out with the intraday setups. All right, again, volume profile, we said the crude's been in a downtrend, so definitely leaving a whole bunch of points of control, more to the upside than to the downside at this point. The market seems to take care of itself and close out those points of control as price action moves. Again, each and every day, that value area, finding that point of control, closing it out. And so let's jump right in to how this plays out in an intraday basis. So we'll go ahead and let's take it the long-term NQ. We said that the long-term NQ today had a 75% bias to the upside. So we take a look at the market profile as it opens up today. We were open, obviously today's price action open to the upside, above, leaving an open gap from yesterday's session. Actually 44.12. I apologize. We actually closed that gap today. So, but price action opening upside. And so on volume profile, let's jump over to the NQ. So it was the NQ I was thinking about when it came to the point of control. Is point of control was downside 43.67.75. The next one up here around 45.09. It would a nice grab to go run and get that. But volume profile. So what we do is, knowing that I have a 75%, let's go to long-term NQ, 75% bullish bias at this point, opening up today's price action. I know exactly where I'm sitting on market profile as I see time-wise where price action is. I take my volume profile. All right, I look at where some key levels. All right, I know the VPOC is downside 43.67.75. I know where the value area was from yesterday, so I take a look at that as possible. Maybe price action will come down into this region if market action comes down, but we really never got down that far as we started to have a nice short entry to the downside. So let's go to the intraday chart. Here we could see on the template, and I'm going to talk about the last trade of the session. As we could see here, nice sell signal crossover to the downside as all four charts were in the red. Now, again, this is counter trend. This is counter trend to that 75% move, right? So if I have 75% to the bulls and then I have a couple charts in the red, that drops that 75% almost down to 50% bias now. But again, a setup. I trade in both directions here. So sell signal crossover was a nice entry to the downside. And there you go, all four charts in alignment. Now, where is the higher probability? Well, right there at the end, as we entered into the last last almost hour of trading here at 319, we get a setup to the upside on the BX, buy signal crossover, indicating that all three charts and the 51.44 being in trend gives me a higher probability. So my 75% almost goes up here to about 80, if not 90% of a wonderful setup. Now, that's a great setup. I take an entry, I manage it on the way up, or I get in, I get out, whatever the trade management style. Now, what is the last additional piece that I'm looking at that maybe keeps me in the trade? Well, here we go. Let's grab that VPOC, that volume profile. Here we have a 3-minute chart from price action today. Okay, we could see a lot of volume here in the value area high, value area low. We could see this, we just showed you this move that was to the downside, that was counter trend to what we were just looking at. If 75% is to the bulls, we had a nice move to the downside, but it's in this area right here as price action, and I'm watching this off screen. and I see that price action on volume profile breaks above the value area high up here. All right, price action breaks above the value area high, and I see that I know that the big picture is about 75% to the bulls. It's getting a little bit of resistance here, but it's 75% to the bull side. And then what I do is I look here, I got my buy signal crossover. I got my resistance here at 44.20. All right, actually a little bit higher. It was about right there. But I trust my signals to say if I got all four in the green, I'm going to take the early entry. Or maybe I wait a bar or two. All right, I see a break above that value area high, and boom, all the way to the close. And that is how the strategy of the T3 moving averages puts us all together, by looking at the long-term picture, by looking at market profile, knowing where daily gaps sit, knowing where open points of control are, by looking at the volume profile, knowing what is to the downside, what is up above, and then tying that in with a 3-minute chart or 5-minute chart. It doesn't matter what you use on your volume profile. So here it is with a candle set up. And once the price action breaks above that value area high, I then take a look at my chart and say, do I have a setup? And there it is. Buy signal crossover with all charts in the green, 5 above 34. This is my 20-tick chart in sync, and with my 50 above 144. And this chart is represented by these 3 charts right here. And so the bars down below, study overlay to indicate where price action was at the time. And we could see if we scroll all the way over, it was all in the green. So green, green, green all the way across the board, puts you into the trade, keeps you in, manages you on the way up, and that is the success strategy. Do all trades work out? No. I won't sit here and tell you all trade setups work out, but when they're in trend and you have more probability combined with volume profile, market profile, and the big picture, that's how we put it together. So as we head into next week, some great places that you can visit to get more information about market outlook, including my stuff here at Trading Fibs. Let's take a look at the economic data for next week. We got housing market on Monday with a Fed speaker. Kind of light on the economic data Tuesday and Wednesday. Housing, jobless claims. Watch that natural gas report and EIA on Wednesday and PMI on Friday. Other websites you can check out, great trading information, is at seeitmarket.com. You can also check out our friend on, let's see if we can get that up here. You can also, we'll come back to that as it reloads. You can also check out the friends over at Hike and Ashi, Trends Made Simple, great newsletter to give you also a bigger picture of where price action is coming from and headed for the week. We could also take a look at market commentary here as from the ICE Exchange. Jason Kelly, another great website which gives you information on longer term holdings. Shadow Trader does a wonderful job. Every Sunday comes out with his video taking a look at the major indices. If you're taking a look at IBD, IBD has also a great setup on the TV station there, IBD TV. And finally, let's see if we, there it is, seeitmarket.com. Great articles that you can read on thinkings of other major traders in the market. And finally, you can always visit my website, tradingfibs.com, to get more information on free sessions or other insights that I have to the market, whether it's on long-term holdings or the market indices outlook recap like you're getting right now, and information on the e-manual, trading room, and trading rules. All right, I believe that concludes today's insight and recap and outlook into the state of the indices. Feel free to stop by again any of my social media outlets to obtain more information. My mantra is one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs. And as always, I really do leave the crystal ball to the experts. I only trade what's in front of me and on my charts. I do like to know where the big picture is, but I'll trade both directions. Have yourselves a blue zone day, a blue zone weekend. Have yourselves a good day, a good night, and good trading next week.